Today I'm going to do a video focusing on the three adjustments that are specific to companies, which is your shares, your tax, and your dividends. Right, starting with shares and this first example. You're given a pre-adjustment trial balance. In that trial balance you're told ordinary share capital 1650 million for 550,000 shares, and you're given retained income, that is the balance at the beginning of the financial year. Right, if you look at the first adjustment, it tells you that on the 30th of June, the company sold an additional 20,000 shares for 4 Rand each, and this had been recorded. So I draw a timeline here to show what has happened during the year. And what I do as well is I separate. I have number of shares, and then on another line I have the Rand value of those shares. So on the 30th of June then, you increased your shares by selling 20,000. So that's 20,000 shares times 4 Rand each will give you the 80,000 Rand. Now that transaction had been recorded, which means this 1650 up here includes that extra sale of shares. So you're going to need to work backwards. If you ended up with 550 but you bought 20 shares, therefore you would have started with 530,000 shares. Likewise, your Rand value was 1650. That would have been at this point. So you're going to minus the 80,000. So at the beginning of the year, you started with 1570 million. Right, the second adjustment. On the 20th of February, the company decided to repurchase 5,000 shares, for which they paid 4.50 per share, and this has not been recorded. Right, I remind you, the first thing we do when we are repurchasing shares is to work out our average issue price. So you're going to take the 1,650,000 that you had before the repurchase for 550,000, gives you 300 cents, or in other words 3 Rand. Right, starting with share capital, we have repurchased 5,000 shares, so we're going to minus 5,000 over here. And then you use that times your average issue price, and you're going to minus 15,000. Because you paid 4.50 per share, the extra 1.50 is going to come in your retained income note. 5,000 shares repurchased. You must put the amount in brackets here per share, and that's going to give you 7,500, which will reduce your retained income. At this point here, you would add across for your number of shares, add across for your Rand value, and now it becomes very straightforward to enter this into the ordinary share capital note. You simply copy down what you have. So at the beginning of the year, we started with 530, and that was for 157 million. We bought another 20,000, which increases our number of shares, and that was for 80,000 Rand. We then repurchased 5,000 shares, which decreases your ordinary share capital, and that was for 15,000 Rand, and that will also decrease your Rand value of shares. And then your year-end totals, you simply fill in 545,000 and 1,635,000. So make use of this timeline, split up the number of shares from the Rand value, and you will find that this makes the share capital note a lot simpler than if you just try and do it without that. Right, moving on now to income tax. In the example, we are given a SARS income tax figure of 70,000, and that is a debit balance. That is your provisional tax payments that you have made during the year. Right, let's look at the adjustments, and I'm going to do two different ones here. Starting with adjustment A, they tell you that your tax expense for the year is 75,000. I remind you of the first video that I did for you, where I said that the amount in your income statement in your answer column must be the amount that you should have paid for expenses or should have received for income. So if you read the adjustment here, the tax expense is 75,000. That is what gets recorded in your income statement. If you have a look at how much we have paid, Okay, we started with a balance of 70,000 here, but we should have paid 75,000, which means you have no asset left here, and instead you owe SARS 5,000 Rand for that income tax for the year. So in other words, you underpaid your provisional tax. Using the same figures, but with example B now, if the tax expense is 60,000, the 60,000 is what should have been paid. It comes into your income statement. In this case, we've paid 70,000. We're only supposed to pay 60,000, which means that SARS owes us 10,000 Rand. So SARS at the end of the year will either end up as a liability if we didn't pay enough tax, or an asset if we overpaid provisional tax. Irrespective of the outcomes here, the tax that you record in your income statement is always the tax expense for the year, the amount of tax that should have been paid. Alright, and then lastly, dividends. In the trial balance here, we have a dividend total of 35,000. That is your interim dividend that has already been paid. So in your retained income note, next to paid or interim dividend, you're going to have 35,000. Remember, dividends decrease your retained income because you're paying out part of your retained income. So that figure will be in brackets. They then give you the adjustment. A final dividend of 46,000 Rand was declared. Now that dividend hasn't been paid. However, it is still part of our distribution of this year's profits. So therefore your final dividend will also decrease your retained income. So your total dividend for the year will be 81,000. Now this is what my pupils often forget to record, and that is the amount that you owe the shareholders. So don't forget to put shareholders for dividends under trade and other payables, because that is what you owe to them. You've paid the interim dividend, so that's fine, but this one, the double entry, is to debit your dividends on ordinary shares and credit your liability, shareholders for dividends. Now obviously in questions, they don't give you Rand figures usually. They usually ask you or tell you you paid a dividend of 55 cents per share. Then you'll obviously take your number of issued shares and you will multiply that by 55% basically. Alright, so that deals with the shares, tax and dividends. I am going to do future videos, but those videos are going to be based on probably the more difficult adjustments that you've already done in grade 10 and grade 11. So that I will do in future videos. So for now, that's all. Thank you.